Hello everyone, this is Blane Markham, Chief Trading Strategist here at the Optioneering team. I'm putting this video together today for you because we're not going live today for one of the eye-opener sessions. Unfortunately, we couldn't work it out in the schedule. John's traveling, so weren't able to sit down and do a live eye-opener for this Wednesday morning, but I wanted to make sure to put this video together for you. Definitely some important things happening out there in the market that I wanted to put this update out there just to kind of tell you what's going on, what we're seeing, just so you didn't miss out on a week. Be really excited to get back in the studio live with John next week, but I wanted to put this video together for you here today. So let's go ahead and hop into what we're seeing here. So looking at the S&P 500 chart right here, of course, last week when we were together, certainly had some pretty choppy days in the market. We were continuing to pull back off those highs. The S&P 500 shot up almost, in several days' time up to, over 6,900 on the S&P. Quickly pulled back and gave back pretty much all of those gains after that latest leg higher. But despite some of the volatility we saw last week, of course, having a big down day on Thursday, we traded down on Friday, but despite the really wide trading range on Friday, we actually saw some very encouraging developments towards the end of the closing of the trading day. So you can see, of course, this was last Thursday, had a big move down. We're continuing to trade down off of those highs as we're continuing to contract, pull back. But one thing that we had thrown out there, we had mentioned that there were several really key support levels coming into play. They were starting to factor in for this bull market, and it was really important to see that those held. And we saw a really encouraging sign in Friday's trading session. Of course, we opened down again on Friday. We traded down pretty substantially. We actually dropped below 6650 on the S&P, but by the end of the day, we continued to rally higher. We had a substantial move higher, finished well off the lows. We actually finished pretty near the highs of the day in Friday's session. And what was really key about that is that one shorter-term technical trend line. It's the 50-day moving average. This is very widely tracked. We actually saw the S&P close above the 50-day. So we went down, we tested it, had a successful test of the 50-day moving average. That was very, very key for the future of this bull market, at least, talking about right now in the short to medium term outlook. If we went down, we had a failed test at the 50-day moving average. There were several key trend lines also starting to work together right along where the 50-day moving average was as well. So, we had a very significant level of technical support, right around that 6650, 6675 level just this past week. So seeing the market hold at that level, successfully test it, rally above it. And now, clearly we've bounced off of that level into this week's of trading as well. So, we've continued to extend the gains, bouncing off of that level from last Friday, up pretty nicely on the week thus far. A lot of that, is tied in getting a catalyst of seemingly that the government shutdown is going to be over, going to, start getting people back to work, get businesses going, airlines, all the things you've heard so much about. It was really starting to become a bit of a market story because it was starting to extend on for so long. So, seemingly that bit of uncertainty is going to be getting dealt with in the next couple of days. That's how the market's interpreting it. So, it's starting to price that in, and stocks are starting to see that as a bit of a tailwind now that that's being removed. So, getting that positive catalyst, that's really what's kind of helped to, see the market get a little bit of a boost from here. But just want to go ahead and point that out that, we have seen a very, very significant, just another opportunity where bulls step back into the market, came in, had a pretty, substantial pullback, from those highs of later in October, pulled back. And since we had that successful test of the 50-day moving average, that to me, and what we're seeing here at our team is saying that, we may or may not be out of the woods yet. We could go down and retest that 50-day once again in some of those key support lines. But the fact that we did have a successful test, it held, and we've rallied so substantially off of it, that likely, what that is suggesting to us is that we're likely, just having seen just a, typical garden variety pullback in the context of a larger bull market. And now we're starting to rally. So, seeing that, just kind of standard garden variety pullback instead of, a larger correction or breakdown or reversal of the trend or anything like that. So really encouraging what we're seeing on the charts here at the index level. Also, too, you're seeing that reciprocated as well in the volatility index, or the VIX. That's what we're looking at right here. So this is looking at the past year on the VIX. You can see, of course, we've had several, spikes in volatility lately where the VIX, traded higher, didn't stay up there very long with pretty, muted spikes, of course, just last week. We had the VIX trade up in Friday's session, as we were, hitting those lows of the day that we rallied quite substantially off of. The VIX, did get above 20 for a bit. It got up above 22, but quickly settled back down and, actually closed near the lows of the day, below 20. So we haven't really had a substantial spike in the VIX there. Of course, this week it's continued to settle even further. It's back down to just barely above 17. So certainly not an elevated VIX situation. Seems that the market's anxiety and expectation of volatility is cooling somewhat. So that's also a very, very encouraging sign. Seeing the VIX starting to cool off after making a lower spike here than what we saw just several weeks ago when volatility was beginning to pick up with some of this questioning the AI narrative that's been really driving this bull market. I do want to go ahead and just touch on the two trades that John and I mentioned in last week's call. So I know the one trade idea that I brought to last week's call was this one right here for PWR. It's Quanta Services. I had a call option debit spread that actually placed live on the call. I kind of broke down the whole technical case for you why I was really bullish on this stock. It's continued to perform quite well. The trend still looks great here. Really liking PWR. Of course, it was an in-the-money call debit spread. I bought the 400, sold the 420. And so, of course, this trade is still continuing to, trend higher. It has a nice series of higher highs and higher lows continuing. The trend lines still look great. Stock is above both of my trend lines right here on the chart. And it was an in-the-money debit spread, so it still remains in the money. It's on track to continue to be performing quite well. Of course, it's a bit longer term horizon on that trade, given that it was, about a month or so out. So, overall, this one's still performing quite well. So just want to give you a quick update that, Quanta Services still chugging along. Great trend behind that one. And John said he wanted me to update you on his Fastenal trade as well. So let me go ahead and pull that one up here too, because I know he said that his trade, he was playing a little bit different setup here. So of course, Fastenal been under some selling pressure lately, got super oversold. John spotted that and was trying to play it with a call to the upside. He was trying to play the oversold bounce, hoping to get a bit of a relief bounce in the stock. And so he got one briefly, but he said as of the close today on Tuesday, he said it, trade is slightly underwater, but hasn't quite hit any stop levels or anything like that. So he's still holding. He's still keeping a close eye on those Fastenal calls that he put out there. But he just wanted me to give an update in the video for that one as well. So just giving you a brief overview of how that one is performing right now. So that one, still trying to kind of sort its way out. It could break higher, could continue to break lower. Kind of hard to say right now, but John's still holding that position as we sit here right now. And the final thing I want to go ahead and put together for you was just kind of where I'm keeping my eyes on now, particularly after the pullback that we saw last week. We, traded, higher several weeks ago, broke out to several new all-time highs, got really overbought really quickly, pretty much gave all those gains back. And, now here we are. We've recovered. We traded down to some support levels of the index. We bounced quite strongly. And so what do we do now? And so, where I'm keeping my eye, probably not a surprise to many people out there, but it's really the tech sector. We still have not seen a massive recovery in the breadth across this market. There's still only about a little less than 50% of S&P 500 stocks trading above their 50-day moving average. So, seeing some improvement there, but it's still not a very broad participation across the board. So, the sector that's still performing far and away the best is the tech sector. Of course, there's some dispersion between there. It's kind of bifurcated. There's some that are performing better than others, certainly. But, overall, if you just look at the sector ETFs, the tech sector ETF, this is the XLK right here, far and away is the best looking chart out of all of the sector ETFs right now. So it's where I'm putting the most, lion's share of my attention. It's where I'm paying attention and looking for the top opportunities out there. There's plenty of different opportunities in the tech sector, that still look quite strong. It's not to say there's not other opportunities out there in different sectors that don't look good. There certainly are. But overall, this is where I'm still focusing a lot of my attention. There's certainly been some, skepticism, questioning of the AI narrative, questioning valuations, things like that. That's kind of what led to some of the upset in the market last week. But overall, still see a really strong trend here. Again, with the tech sector ETF, we still haven't seen a trend reversal here. We broke out to new all-time highs, gave back some of those gains, traded back down to support on Friday, closed near the highs of the session. and now we've bounced right back up. Seemingly, it looks like the XLK ETF is continuing to make a nice series of higher highs and higher lows here. So this is, still encouraging trading in my eyes. There's certainly some big events coming up for the tech sector. Of course, we have NVIDIA earnings next week. That's going to be huge just across the market. I fully anticipate they're probably going to report really solid numbers. The stock's probably going to react more likely on the guidance that they issue. We've heard from pretty much all their major customers, minus OpenAI, of course, because they're not a publicly traded company, but all of their other major customers have already reported earnings, put out their CapEx numbers. So, there's probably going to be a lot of scrutiny on that report and the guidance in particular, but, something big to be on your radar looking into the next week. But, between that, finally getting the government shutdown alleviated, get the government open back up, get some of that fresh market data coming in. Those are likely going to be your upcoming market catalysts. So definitely have those kind of on your calendar, kind of on your radar, paying attention to those, because that's probably what's going to be moving markets in the next couple of weeks. But with that, that's everything I had for today's eye-opener session. I hope you get a chance to watch this. I'm really looking forward to being back in the studio with John next week so we can break it all down live, talk to you. I'm definitely missing the engagement with you all, with our eye-opener audience today, but I look forward to seeing you back here next week. So until then, have a great week. Hope you enjoy a great weekend, and I'll see you back around next Wednesday. Take care, everybody.